Hello everyone, this is Ross with Market Traders Daily, and this is today's video analysis for March 2nd, 2020. Today we're taking a look at the NZDUSD New Zealand dollar versus the US dollar for today's trade analysis. Now I've gone all the way out here to the weekly time frame so we can get a sense of where we are in the grand scheme of things here for the New Zealand dollar. Go all the way back to the left hand side of the chart, red vertical line, back to August of 2015 was the time where we challenged the current support zone on the far left hand side all the way back in 2015 down into the green shaded area. Kind of hard to see the green zone at the bottom, but when we zoom in you'll see it. It's right around or just above the 0.62 level for the New Zealand dollar. So historic level here. Now that we've seen that, where it comes from, let's go ahead and zoom back down to the daily time frame, and you can see there's the green zone, that 0.6205, 0.6220 level. You could zip it down there to 6200 if you wanted to, but we're down into that significant historic multi-year support level. The last time we were here, bottom of the red trend line, which was back into the end of 2019, significant support, reversal, turn around and went back up. Nice little inverted head and shoulders down there, bottom of the red trend line, and turned the market back higher. Went all the way back up into the mid 0.67s at the top of the red trend line. Capped out resistance and began a new downtrend, now pushing all the way down into our support low. Let's go ahead and zoom it in one time here on the daily. You can see what's happened now in the past couple of days since Friday. We reached all the way down in there, 62. Market repels, buyers step back in, drive it back higher. Now we're challenging back above 62.50, 60, the pink shaded area, which again, if you go back to the left-hand side, the pink shaded area was where the inverted head and shoulders was created back here on the left side, right there where the blue circle is. Support at the pink zone, support at the pink zone. And that's where it turned around and went back higher. I'm not saying we're going to create another head and shoulders pattern. What I'm saying is we bounced off the green zone. We're back above the pink zone. History tells us that if that happens again, we might see some intraday or short term, potentially even longer term reversal if the market turns around and goes back up from here. The expectation that I have is with this sudden surge and infusion of buyers into the market from the 0.62 level is that we could be looking for at least some short term, maybe this week, a little bit of a rally for the New Zealand dollar. So I'm looking for breaks of resistance. I'm looking for shifts in momentum to carry it higher to the next resistance and the trading opportunities that will happen if that continues to go up. Now, of course, risk is the market finds resistance, turns around, and goes back down. Zoom it in one more time. So essentially what we're looking for today is that it gets above the pink zone, stays above the pink zone, 0.626050, does not get back underneath the pink zone, continues to carry higher to the yellow, green, maybe the black trend line or the blue trend line become our targets on the way back up. Just one simple fib. We don't have any fib here on the chart. Let's go from the highest high to the lowest low. And that simple fib right there puts the 0.236 Fibonacci retracement level right here at the green zone, 63.24. So a simple Fibonacci retracement level of the longer trend range puts it there at the green zone, 63.24, and happens to coincide with the black trend line. Let's go ahead and take it on down here to the 4-hour time frame. Take a look at what it looks like here on the smaller time frame where we've seen that rebound from the green zone, and now we're sitting just above the 0.626050 level, the pink zone, which we just looked at there on the daily time frame. So again, as long as it stays above it, I have this expectation we may look for it to ease higher on the day, at least the yellow zone, if not that 236 fib that sits back up here at this green zone and the black trend line. We actually have a different fib we could draw here on the smaller time frame. Let's go from the point where it touched the black trend line last, right here, to the low. And in doing that, interesting enough, 382.6304, again, just up here the green zone. Sure, we could nitpick this and get it all the way down to this last little run right here looking at Fibonacci. We're just above the 50% and 382 at the pink zone. 618 is at the yellow zone, and further fibs are back up here at the green zone. So you can nitpick Fibonacci all day long. You could do it here. You could do it here. So I think the longer term fib really has my interest back up here towards the trend line, which is that black trend line and that green zone just into the 6,300s again. So what I'm looking for today is it stays above the pink zone, does not get back underneath, targets higher levels. The risk here is that it gets underneath the pink zone, so stop loss should be underneath in case you decide to take this long for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.